Hello, ladies and gentlemen, and welcome to another Keller Williams Realty Technologies Systems for Success series. Today we're covering Profit Dash and your taxes. There are three actions that you can take right now to save thousands on taxes and increase your profits. Profit and taxes go hand in hand. And simply put, the less taxes you pay, the more profitable your business. Our question is, have you downloaded your Profit Dash app yet? It's still not too late to get your taxes in order and let Profit Dash help you. And in today's session, our special guests are going to help you write off the right expenses against your commissions, organize your records, and help you understand your tax obligations. So here's what's on our agenda. We're going to introduce Raj and Aaron. We're going to talk about they will talk about, I should say, what can be written off against commissions. And Raj and Aaron, go ahead and come on the line as I am showing what is on our agenda today. Number three is how to quickly organize your deductions, make it a little bit easier for you, and how not to be blindsided by your tax obligations. All right, hopefully you all are ready to get started. Gentlemen, are you on the line?
You are, Kevin. Thanks for having us today.
Awesome. Hello, gentlemen. How are you today?
Doing good, thank you.
Awesome. Let's go ahead and see if we can get your webcam on. There's the guys right there. Hey, everyone, let me know if you can see these gentlemen. I see the guys right there looking good. Thank you so much for being here. So this is Raj Bhaskar and Aaron Lesher. And Raj, did I get your last name correct?
Oh, yeah, definitely.
Okay, awesome.
Like Smith, with a B.
Okay, awesome. And I like how I have a picture of these two. It took, I'm like, hey, please send me your headshots, but who needs headshots, right, when we got them right here in front of us. Hey, thanks so much for being here, guys. Tell us a little bit about yourselves. Raj, it says here you are co-founder and CEO of Hurdler. Tell us a little bit more.
Sure. Founded Hurdler a few years ago, and Hurdler developed Profit Dash, and we partnered with Keller Williams to really integrate it tightly into Keller Williams' system, so it's just easy to obtain and use for KW Associates. So we really focus on finances. And then I met Aaron a little while ago, and Aaron was previously with Ernst & Young doing audits. It was a perfect fit. He's CPA, so it was the right fit to really lead our customer success team here and to help our customers be successful in their financials.
Excellent. And Aaron, so you guys met not too long ago. Tell us a little bit about yourself and how you came into connection with Hurdler.
Yeah, so Raj went over the basics. Prior to joining Hurdler, I was with Ernst & Young, which is one of the big four CPA firms, doing that in New Orleans, auditing Fortune 500 clients. But Raj allowed me to kind of pursue some of my passions, working with small businesses and directly helping people. So I came on with Hurdler about 8 months ago. Since then, we've been able to basically design, build, and release Profit Dash. So that's what we've been up to the past 8 months or so.
Awesome. All right. Well, let's talking about those passions. Let's talk a little bit about some of the things that are on our agenda. First of all, I would like you guys to talk about, hey, what can be written off against commissions?
Sure. So before we kick that off, Kevin, just to preface all this and set the right framework, Aaron's going to cover that section specifically, and with his him being CPA, it's very helpful. But as you mentioned in the intro, to simply put, the less taxes you pay, the more profitable your business. So that's a simple thing to understand, right? Because the less taxes you pay, the more money you have in your pocket at the end of the day. It's not always that simple to implement because we, as agents, we get focused on generating commissions and earnings, lead gen, closing deals, right? That's the top line. But there's some simple things you can do along the way that are there. They're just sitting there. It doesn't take much extra work. We're talking about minutes a week that'll really save you thousands a year in your business and could be the difference between having a profitable business and an unprofitable business. So I'll hand it off to Aaron, and he's going to cover our first section, which is tip number one, is giving you a good idea of the exact expenses you can write off against your commissions. And there's probably a couple of surprising ones that sometimes people really overlook those.
Yeah. So thanks for joining us today, guys. Really excited to do this. So as Raj outlined, the first point we're going to talk about is what you can deduct against your commission income or your revenue. And the key thing to know here is that generally any expense that's related to a business purpose you can write off. And the basic equation to calculate what your taxes are going to be what you're going to be taxed on is, of course, commissions minus business expenses, and that's going to equal your taxable income. So the goal is to shrink that taxable income number as small as possible so that you're paying taxes on only a fraction of your actual commissions, and that's actually going to increase your profit at the end of the day. So what I'm going to do is just go through the 5 basic groups, or the 5 most common groups, 5 most important ones, and just kind of briefly talk about each one that you can claim as a write-off on your taxes. So the first big one is when you get your commission check, any commissions that you pay out or brokerage fees or splits can be subtracted from that gross commission check. So if your commission check doesn't include automatically those splits or those brokerage fees, that's the first thing that you want to subtract from your gross commission income. So whatever percentage that generally is for you, you want to first make sure that all that's taken out before you start thinking about taxes. So that's number one. The second thing is all the expenses you're incurring to generate business, whether that's these days, especially in the past like 5 to 10 years, so much of that those lead gen expenses are being done online. So whether that's done through Zillow, paid ads, Google AdWords, Facebook now is becoming a really important revenue or a place to spend money rather, to generate ads or generate business and pay for those ads. So make sure that all of your online ad expenses and also the traditional forms like direct mail and other forms of flyers, those types of things, you're calculating exactly how much you're spending, so you know every penny that you're spending on those types of things, and that you can claim that all against your commission income to, again, shrink that taxable income number as small as possible. So commissions paid, and then also the advertising and lead gen. The third thing is a pretty straightforward one. If you're paying desk fees or any type of office expenses, like if you have your own office, so rent, again, that's an easy one, but you want to make sure that any overhead like that you're subtracting as well as a write-off. A big one, everyone uses their phone for business, even if it's a general plan, even if you don't have a dedicated business phone line or phone plan. So if you use your personal mobile number for business as well, you can actually deduct what's called the business use percentage of that phone bill. So if it's $150 a month and you use roughly 50% of your phone for business use, then make sure that you're writing off $75 a month for that. And you can it's a little more detailed, get into how we can support that type of transaction, or that expense rather, but it's fairly straightforward. Again, even if it's you split between personal use and business use, you can still write off the business use percentage. So you don't want to you don't want to let that deductible expense kind of slip away there. So those are the first 4, and then the last thing I'll cover briefly is business mileage. So with mileage, and in Profit Dash, we have a really easy built-in way to track those business miles, and there are other solutions out there, but in Profit Dash, we have that built-in version. With mileage, you really have 2 methods to track. You can do what's called the actual auto expenses, where you write off your gas bill as a percentage of what you use for business. And then you also can write off your other actual expenses like maintenance, repairs, insurance, those types of things. A lot of times with real estate agents, when they have a car that they use to take the kids to soccer practice on Saturday and Sunday, but during the week they go visit clients, splitting those expenses can be really time consuming. So there's another option that's really easy that includes, it's what's called the standard mileage rate, and it includes baked in all of those expenses estimates. So it includes an estimate for gas, maintenance, repairs, depreciation, and insurance. And so for 2016, the IRS set that rate at 54 cents per mile. So every business mile you travel can be is another 54 cents. And it sounds like a pretty small number, but if you drive a couple thousand miles a year for business, it's going to add up really quickly. So again, that's a couple $1,000s in taxes that you may be paying, as opposed to if you track that, you're saving that on your tax bill. So mileage is a big one that we help track in Profit Dash. But those are the key ones, guys. Hopefully that gave you a little bit more information, but I'm going to hand it off to Raj, and he's going to go through the second and third points of today's webinar.
Kevin, did you have any questions you wanted to cover on that section, or should we move on to part two?
I don't have any questions, but I did just want to, let's just verify what we learned right there. So first of all, we learned if you have any splits, brokerage fees, anything like that, before you even count that commission as income, you take all that out, right?
Yep.
Next one is any
that's a big one. It's often overlooked because depending on where those commissions are coming from and where you're doing your deals, a lot of times associates are assuming that it's already been taken out. So you don't want to overlook those things. You definitely want to double check them. It can one transaction a year, if that's the case, it can be pretty significant.
Well, can you imagine that? You're exactly right. Any kind of lead generation expenses, that's Zillow, AdWords. We tend to forget about the social media. We are paying for that. So anything we pay for, we're going to deduct.
Absolutely.
Okay, and then of course our desk fees, rent overhead. The one I didn't know about, and I think a couple people are excited about, is the phone plan. That's awesome. So let's remember the phone plan, especially if you do split it, like individuals like myself that are agents and have other things going on. And then my favorite one, of course, is a business mileage, because it is built into Profit Dash. Those of you that are on the call, if you haven't taken advantage of that, what a great system to have. And it's never too late to do that, is it, Raj? To add your mileage?
Never too late. And we every year we always come across folks who say, well, I'll start it at the beginning of the year. If you look at the thousands in expenses and deductions that associates have on average every year, even if you divide that by 12, starting a couple months early can save quite a bit.
Right.
And it's just it's kind of it's similar to like New Year's resolution on we're going to work out more, right? If that's the case, I mean, we should start it tomorrow or tonight. It's not something we want to put off for another month, and it's not a sales pitch. It's just how do you start getting into the right habits to increase your performance.
Right. It is all about the right habits. And I did say it's never too late, but I guess 2018 would be too late. Okay, great. And then two questions came in regarding the same thing. What if you work from home? Tell us about office space deductions.
Sure. So Aaron will get into a little bit of the details, but I want to show that I know about it as well. But one of the key things is you can't have two offices. And in this particular case, what I'll say is you can't claim your home office as well as if you keep a regular office at your main brokerage location. You can't do both. So I'll let Aaron get into the details on that.
Yeah, that's a great question. Home office can be a little bit complicated, but in general, you can either, just like mileage, you can do all your actual expenses and divide them by your business use percentage. So if you have home internet, for example, you probably have an internet, a Wi-Fi setup at your house, right? So you have to take the business portion of that. You can write that off. Same thing goes for the phone line, other expenses, and that sort of thing. So you can do the actual method. If you want to do the built-in rate, what the IRS has done is they've said that for every square foot that your home office is, you can deduct $5 up to 300 square feet. So you can take up to $1,500 in home office deduction on your tax return. A couple limitations there. That preclude. That means you can't take. It means you can't do the actual expenses as well. You have to choose one or the other. So whichever one's more advantageous for you. And then with the home office itself, it has to be. The IRS is like very strict about this. It has to be a dedicated space. So it can't be your kitchen counter or the treadmill in the exercise room. You can't like set up your laptop on there and claim that as a home office. It kind of has to be like a dedicated room. That's separate from the rest of the house. So as long as you kind of meet those criteria, and we can provide more detail about it later if needed. But as long as you kind of meet those criteria, then yeah, you can and also as what Raj said as well, then yeah, that's another deduction you can take for sure.
Okay, awesome. All right, thank you very much. All right, we had some other questions come in, but we'll move on with the content and we'll hit those after we're done. Let's move on.
Sure.
How to quickly organize your deductions.
Yeah, the other clarification, Kevin, I'll give on the home office when I said you can't have 2 offices. So you can't have multiple offices, but the key part I left out is if you have multiple offices, you can't claim business mileage between your multiple offices. The general rule is if you think like it's getting too smart or too cute, it's probably not a good idea. But otherwise, we find that most associates are too conservative in leveraging all of their deductions because people tend to think that the more deductions you take, it's going to set off some alert at the IRS to get you audited, and that's just not true. That's not how it works. There's a random number of folks that are audited every year, and that's it. It's random. Unless someone, like maybe if someone sent in a tip on you to the IRS, perhaps that could trigger something, but by taking a deduction that doesn't trip the audit wire, the deductions exist because the U.S. government wants you to build a business, right? It's part of the incentive to build business and to help subsidize some of those expenses. So the second key thing we're focusing on, the second big action today is how can you quickly organize your deduction records even if you haven't been tracking anything throughout the year. So if you're new at this or if you've never really gotten in a rhythm, this is the perfect time to start doing it because it's December, right? You're going to need to package this stuff up hopefully in early January for your CPA or tax filer. And I'm going to go over some tips on how you can do that manually. So yeah, we have an app for that, but it's good to still understand how you do these things manually so you can get an appreciation for how much time it actually takes sometimes before you automate these things. So what you need to start quickly, to really quickly organize, you need a few key things. You want a printout of your bank statement, right? So this is going to be for the full year of your bank account where your commissions would get deposited, like your number one savings or checking account. The second thing you'll want would be your credit card statements for the year, and that would be for the credit card where you charged any of your business-related expenses. The third thing you're going to want are any 1099s, right? So if Keller Williams sent you a 1099 or you received 1099s business-related from any other parties, you're going to want that. And the fourth thing you're going to want is a red pen. This red pen is key because what you're going to do with this red pen is you're going to go through your bank statement and your credit card statement, and you're going to circle every single item that is business-related. So any deposit that is business-related, like commissions or other earnings related to your real estate business, you're going to circle those with the red pen. And then you're going to go through your credit card statement really quickly, and you're going to circle anything that is business-related, 100% business or partial. And next to the partial business items, you're going to mark it with a P, and then you're going to put the percentage that is business-related. Right? So real quick and easy steps. The hard part may be that, this particular expense you see in March, you may not remember if it was business or not. If you don't remember whether it was business or not, and you're not able to figure out 100% whether it was business or not, you got to leave it off. Because if you get audited, you're going to get penalized for that. And then the final thing is when you have all that, you tally it up, you scan it all into one doc, one file, and you send that off to your CPA and tax filer. Right, that's the manual way of doing this, and you can do that fairly quickly. But when I say fairly quickly, depending on the number of transactions you have, it could be several hours of work. The alternative method is to use our app, Profit Dash. You download that, and when you get the systems going, it takes a few minutes every week to really stay on top of your finances. Because if you link it with your business credit card, it'll ping you anytime you have a business expense, and all you have to do is tap it, confirm the categorization, and you're good to go. At the end of the year, when it comes tax time, you just tap on the tax report and you enter in your tax filer or CPA's email address, and it just fires off that report that you would have otherwise marked up with a red pen, tallied up, and emailed to your accountant. It's very simple. So there's two different methods. You can do it manually. It's not impossible. It takes a bit of time, but it's good to learn like what that really takes. And then the second way is to automate it. Hey, Kevin, do you want to answer, should we go through some questions before we move on to the third quick action item, or should we just jump into number 3? Or it would be number 4 on your deck.
I'm sorry, I was muted there for a minute. I got a question. What about wardrobe and grooming?
So wardrobe and grooming, it's a little tricky, but the key thing is that on wardrobe in particular, that wardrobe has to be 100% dedicated to your business. You can't do a percentage. You can't say I wear it half for work and half for personal. That's not going to work. But if you literally only wear it for business, you can write that off. Grooming, you cannot. Now, if you had a particular grooming expense just for a showing, you can potentially write that off. But I'd still say my personal advice is you're probably pushing the limits a bit. Now, if you're on, let's say, a real estate podcast with video, and you do that on a weekly basis, and you need to be made up for that podcast, that you can write off.
Okay. Now, we were mentioning the square footage, and you mentioned something about $5 a square foot, and Nancy was asking $5 a square foot up to what?
So yeah, there is a maximum amount, and I think Aaron said it was $1,500, and we can $1,500 is the max, up to that many square feet. But also we have a site called 99deductions.com, and if you go to that site, and the first thing you do is you just say you're a real estate agent, it'll tell you all of the deductions available to you as a real estate agent. One of those is home office, and it explains nicely, and it has a very easy-to-use diagram to help you compute all that.
And was that a 99.com, or is that 99 spelled out?
99deductions.com.
99deductions. And I'm going to
send that. It has other useful info, so like if you're an Airbnb host on the site or a landlord, it also has deductions for that as well. So it's a pretty good site.
99deductions.com. I'm sending that to the entire audience. Thank you. That's very helpful. Mm-hmm. All right, I just sent that, Diana, to the entire audience, so you all should get that. It asks, is QuickBooks the best software plan?
Profit Dash is the best software plan.
Excellent question.
Really, I'm here to really go over the fundamentals and how you can do things manually. I think everyone knows there's already a way to automate it, but I want to go over the fundamentals of how we can do it manually and some other understandings, because it's good when we're talking about finances to understand things, because that's the best foundation from which you can grow your business on.
Understood. Okay, great. That's it for the questions so far. Let's continue.
Sure. So the last key topic before we get to the bonus section is how to not get blindsided by your tax obligations. So the key thing here is, especially those that are new to the real estate business, is that this isn't a normal 9-to-5 job. I mean, you already know this from the open houses and all the weekend work, but it's not a normal 9-to-5 job in the sense that you don't have an employer that withholds your taxes and then sends you a W-2 at the end of the year. You're completely responsible for your own taxes. So you have to pay taxes outside of your commissions, right? So you don't get to keep your commissions 100%. The easiest way to manually not get blindsided by your tax obligations is to set aside 40% of your commissions into a separate savings account. Let's just call that your tax savings account. So you can open up another bank account, and as you get commissions, you should take 40% of those commissions and keep it in this separate account. And from that account is where you're going to make payments quarterly and your final end of the year tax payment to cover your income tax and self-employment tax. Of course, the automated way is to use a real-time income tax and self-employment tax calculator, and that's something that's built into Profit Dash. And there's also on the web, you could probably search and find some online calculators. But the most accurate is going to be Profit Dash, and that's something, it'll tell you at any given second what your actual tax obligations are. This is important because you don't want to overspend, right? One of the problems with not knowing your tax obligations in real time is that then you tend to think that you have more money than you do, right? Because you haven't paid out your tax obligations. When folks have, like when we have more money than we think we have, then we tend to spend more money, and that's not a good recipe for success. So that's the quick and dirty about how to not get blindsided by your tax obligations. It's really to set aside a certain percentage every time you get a commission. It's okay to celebrate a little, but you got to set aside a good chunk of that for taxes. Kevin, do you want to do another question before we jump into the bonus section?
The only other question I got that we haven't answered so far is, what about branded clothing? Does that include?
Definitely. That branded clothing can be uniform. You just can't wear it for fun outside of work.
Okay.
The same rule applies.
All right. Just no wearing it, going to play tennis, or any of those other things.
Well, unless you consider tennis, truly consider it networking.
As a part of lead generating, yeah, good point.
Sure.
Excellent.
And I'm saying that when I say truly consider it, I don't mean like a lot of us in marketing think everything is networking. So that is true, but it needs to literally be 100% networking. So if there are expenses associated with playing tennis, you should be able to justify those expenses as business expenses. Otherwise, you can't really count that uniform as a business expense.
Gotcha. Okay, we have less than 3 minutes to talk about our bonus subject matter.
Let's do it. That's all we need. These are 3 types of expenses that are strategic. That means for every dollar you have in this expense, it should increase your revenue significantly. And the bonus on those is you can write them off. So it not only grows your business, but you can write them off. So Aaron's going to tell you all about that.
Yeah, and we'll try and keep it under the time limit here. But the first strategic expense is going to be your lead gen, right? Ideally, every dollar that you spend on lead generation should net more than you actually spend. So you want to pick out the most strategic places to spend those lead generating dollars. And one of the most strategic things that we've seen from agents, and this is not an advertisement for them, but Zillow, which is a very popular online platform for real estate, obviously. So there's actually a study done that said that for every dollar spent on Zillow, agents got $2.50 back in terms of commission revenue. So if you think about that, there's really no better strategic expense if you're getting a 250% return on your investment. So that's something that if you're not doing, or if you just have maybe a little bit per month going into that, maybe that's something that you look into in terms of expanding. Of course, if your business can support it. So that's number one. The second thing is basically under the broader umbrella of delegating, but looking to bring in some help. So that may look like hiring an admin or some type of support person that you pay. And now obviously their salary is a business expense that you write off in addition to any other benefits that they get as part of being employed. And they don't have to be full-time. It could be part-time, something like that, to help with the basic administrative tasks that you may be spending a lot of time on each week, that if you didn't, if you paid someone to do that for you, paid a talented person to do that for you, you can focus your energy on bringing in more commissions and building your business ultimately. And so an interesting way to think about it is, if you're going to pay this person, $45,000 a year, thinking about it as a $45,000 expense can seem very daunting and pushes a lot of people away from making that choice. But I think most of us can know pretty quickly within a couple weeks or maybe a month if that person is going to be a right fit for your team or your culture, your style. So as opposed to thinking about it as a $45,000 expense, strategically, it's not going to be that big if it doesn't work out. So you'll know pretty quickly, if that hire is going to be a good fit for you, and then you can make the decision to continue or not. But it's very strategic to delegate those tasks out so that you can focus entirely on building your business. And then lastly, as you grow your business, we've learned, from Gary Keller and other real estate entrepreneurs that the listings, when you work with sellers, those are generally a lot more profitable, both from a time efficiency perspective and dollar perspective. And so if you can shift your business, your personal business, towards working with sellers as opposed to buyers, in the long run, working up to that, obviously, that's going to be the best for you. So it's going to result in the biggest bottom line. So if you can shift and bring on additional resources or refer buyers that you work with, even if it's tempting to take on that client and get that commission, building your business around sellers and listings as opposed to buyers is going to increase your time efficiency. So if you can bring on buyer specialists as well to help you with that, in the long run, that's going to result in a bigger bottom line. So those are the three strategic expenses here. We've got your lead generation, specifically the online stuff like Zillow, strategic administrative hires to delegate those tasks they're spending a lot of time on, and then focusing on listings as opposed to working with buyers and bringing on buyer specialists. So that's those are the three, and then we'll wrap it up, and I'll look forward definitely to answering more of your questions.
Awesome. Thank you very much. Okay, two quick questions. What if your hire is your husband to do the administrative work, or wife, or partner, or spouse, however it works out?
Is that a question, or
that's a question?
If that person's qualified and they're able to meet the goals that you want for that position, that's absolutely fine.
As long as you're paying them, they have to be shown as being paid a salary. Is that right?
Well, they have to be. You have to have an expense to write off the expense.
Sure.
So you can't write it off if they're not actually getting paid.
Right. So to answer Chantel's question, or just to make sure Chantel's clear, is that if your husband's going to be doing the work, make sure that you are paying him appropriately in the right way through a paycheck, so that you could run those expenses. Is that right?
Well, I'm just saying that if the question is, do they have to get paid for it to be a write-off, the answer is yes.
Yes, agreed.
But if you can get someone to work for you for free, why go through the expense to begin with? Exactly.
Okay, very, very good.
But it's probably important to maintain the happiness in the household as well. So whatever that takes, that'll probably trump everything.
Okay, so here's a question. Someone's asking, is there a limit to how many transactions we need before we start paying for Profit Dash? How many transactions was the question?
Oh, this is a question on Profit Dash. Sorry, I was caught up in taxes and profit. Sure, on the app itself, I think it's limited to the initial trial period is for you to track $1,000 in deductions, and for most folks that equals $200 in after-tax savings. But if you reach that limit too quickly, it automatically extends. And if you just didn't get a chance to really try out the app, you can request through the app to have your period extended, because we want folks to really focus on generating profits. That's the real key here. That's why we call it Profit Dash, Sure, it calculates your taxes, helps you track all that, but the real thing is how do you really maximize your profit and build a business that's going to last?
And all of the other components of Profit Dash work normally. It's only the amount of deductions that you can take. Is that correct?
I think so. I mean, basically, you have the full app available for use, and then where are you gonna save money basically in your business is taking advantage and leveraging every single deduction. If you think about it, if you leave one deduction off the table, that can cost quite a bit. Right. So we project. We're projecting right now, based on all the data, that associates are saving at least 10 times what the app costs on an annual basis. I think the app is like $199.99 a year, $200 a year. Agents are saving at least $2,000, so it's a no-brainer. They're just saving that just in after-tax savings. Forget about the time savings. If you follow the manual methods that I outlined, that's the quickest manual method you can go through to tally up all your finances for the year to give to your accountant or tax filer. We can eliminate all that and reduce it to, let's say, an hour cumulative in a whole year. If you can apply that time savings to go close another deal, these are no-brainers. So we want folks to be happy. We want to position you guys to grow your profits. That's the real key.
Outstanding. All right, we are out of time, gentlemen. We're almost 10 minutes over. Thank you all very much. I'm going to send the rest of these questions to Aaron and Raj so that they can continue to answer them for you all. We will respond to you individually with your questions, so I'll make sure you guys get those questions with the people that are asking them. Sure. Thanks again for being a part of today's presentation. We really appreciate it. Such great information.
Yeah, our pleasure. Thanks for having us on. It's a lot of fun.
Awesome. Thanks everyone. And I'm going to go ahead and keep the questions module going here for just a little bit. But aside from that, if you want to make sure you stay on the edge of real estate technology by using KW Technology, and we hope you're making it a great day. Thanks again, gentlemen.
Thank you, Kevin.
Bye, guys.
Bye-bye.